Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, January 13th, 2008. Well, as we go into the chart analysis today, folks, I want to focus in on the intraday 10-minute quite a bit because there's some key patterns here I really want to explore. I also want to look at the 60-minute on the SPY and kind of analyze that as well, and then go into a couple other stock charts to do a little bit of analysis on the intraday. Now, let's just talk about a little bit about where this market is going today, because we are seeing the market gaining a nice little bit of strength here in the intraday period, and you can see what's going on right here, folks. This is a live SPY chart as I currently am doing this video, and the market has actually just come off the lows in two successive candles to break through this key resistance line. Now, we're not technically through the resistance line because we need to close above it, but as of now, that's a solid move in the markets through the 50 and the 20. And I want to show you a couple key indicators here on this chart on the intraday 10-minute SPY stretching back to yesterday here, and you can see the 12th, today's the 13th, and there's the dates right up here. Now, the market right now is currently down about 5 points on the Dow, but the Nasdaq and S&P have gone positive. The Nasdaq trading up about 8 points, the S&P up about 3 points. So you have kind of a pause-ish mixed day after the last few declines on the markets. Now, what I want to show you on this intraday chart is a couple key levels how you know where the market's going to trade. All right, we know what happened this morning. We saw the market gap down early, then regain and go slightly positive, then fall down over here and really go negative a decent amount, and all of a sudden you've seen the market burst up. But notice the start of a pullback here, and this is why. You have to know this key resistance line is going to be a tough level to get through, and you can see a little bit of a pullback starting. Now, if we close above and then we can confirm it, well, then that's another story. But you really need to see this close above and not pull back intra-candle back below these lines, and at that point you need to see confirmation. Confirmation in the next candle is going to be absolutely key. Now, going in this chart, we started the gap down, folks, and right away, yesterday, there's two levels you need to watch for, actually multiple levels. And I'm going to draw them in on yesterday's chart so you can focus them in on today's chart and analysis. Number one, this is right here, as you can see, is a major resistance point. All right, now why do I say this is, and I'm just drawing this in, and by the way, I'm just looking at this right now. Well, because you can see here, the market fought up, bounced down, fought up here again, bounced down, fought up again, and couldn't get through this area right up here. That, to my trained eye, is telling me major resistance right there. Sure enough, look at this market today. You gapped lower, you made a move up. Where did you go? Right to that line. What did it coincide with? The 50 moving average. Double resistance point right there because you have the trend line and the moving average pushing the market down. What do you get? A sell-off. Where do you go? To the 20 moving average. All right, again, you come up, you come down, you come up, retest it, you cannot break through it. All right, then the market starts to kind of lollygag here and kind of come down and start to sell off in the early afternoon. What level do you go to? Absolutely, the next level you want to pay attention to, which is the low of the day from yesterday. We draw that out. What does that come to? Look at that, folks. So it's no coincidence here that these levels are in. And before, if I was just doing yesterday's analysis, setting myself up today, I would have this on my chart, and it wouldn't matter. I would still draw in these same lines and follow them over to today, because that's how you got to keep track. Every level that was important yesterday could very well be majorly important today, and as you can see, you draw in those key lines today, they come in to be absolutely amazing. What a shorting opportunity right here. What a shorting opportunity right here. What a buying opportunity anywhere down here. Now, notice the pullback, folks. We pulled back on this candle, and I just noted this at the beginning of the video that we were breaking above, but I said you have to close above here. Now, you closed really right on top of the 50. You closed above the 20, which is the yellow. The blue you closed right above. To really get above, you have to confirm it now, though, and that's going to be a little tough. So I'd be a little cautious here on this chart panel and see if you can consolidate and then make a move up. That's what I'd be looking for. I'd be looking for a consolidation candle or multiple candles trading sideways and then a break up after a couple candles through this high. And where do you think it's going again? Could very possibly go to this high right here, folks, if it's able to break the high of this point right here. All right, so again, if this were to consolidate and stay above the 20 and the 50, then you'd start to look for the high to be hit here. If that goes through, then this would be resistance 2. So you have R1, R2 on the intraday chart of the 10-minute. All right, should it break back below the 20, all bets are off. All right, it breaks below and closes below, well, then you look for confirmation of the downside, and you could easily go back and test the lows. So that's how you want to set up yourself in the intraday trading on this afternoon's charts. Okay, so we'll look back at that in a little while, but I just wanted to point out the key here from noting this resistance line to noting this. And this is just price and pattern, folks. That's really what it is, all right? And you have to know that, obviously, to be aware of it and, and to be able to trade off of it. But what I want to go next to is the 60-minute chart. Here's the 60-minute, guys, and I talked about the symmetry yesterday. And you can see the symmetry really coming to fruition here. I mean, it's just up and straight back down. Where do you think we obviously came down to? Absolutely, right into these levels. There's a level right here, which I drew in yesterday, I believe, either in the Research Center video. And by the way, folks, I go into super depth on the daily charts and the weekly and the monthly to give you a better view. We call out our key pivot days and support lines and the buys and sells on gold, oil, and the U.S. dollar, as well as the S&P, the SPY. You name it, it's in the Research Center. It's so much more hardcore than these videos here. These are just giving you a taste of what we do and our talents and our preciseness and accurate analysis, avoiding all the Wall Street hype that we do avoid. And that's why we're so good at what we do, is because we take out all the garbage, all the Wall Street hype. And it's funny because a lot of people have been very bearish the last few days, and we said, guys, we think there might be a little bit of a bounce or a pause day today, and those in the Research Center obviously know there's a little more to it than that, but that's what we've been talking about, and sure enough, you see the market flat on the day here, to even positive with the NASDAQ and S&P positive, and obviously those in the Research Center know the exact calls, and we won't go into that, obviously, for that's just for their ears. But in any case, note this, folks, you have a key line right here. If you were to break a little lower, you're going to have a key line here as well, which is very possible. It's not out of the realm to think that you would come down here, but in any case, on the SPY, look at that, how you went straight up and you came straight down. Our short call was right here. What a move down. And it's just been bear flag after bear flag. Look at what you have. Sideways trading for a breakdown. Bear flag, breakdown. Bear flag, breakdown. Bear flag again, breakdown. Now you finally have a little bit of an engulfing candle here on the 60-minute, and you need to watch this because this is actually the first bullish sign that I'm seeing here that could be of interest. Now, the 60-minute doesn't close for a little while, so we're not sure, again, and I'll be done with this video by the time we're really sure of it. But in any case, note that this candle could be of interest, and we'll have to follow that as well to see what it's telling us. But it could be a positive engulfing candle, which could signal a little bit of a change in trend in the near term. So we'll continue to watch that, folks. Now, I want to go to Goldman Sachs chart because my partner Nick in the chat room alerted people to this, and this is one of the best head and shoulder patterns you can see. We called it beautifully yesterday and said, watch for a major sell, and we set this out, and it was set in the daily market report last night too, which is available to our Research Center subscribers, our premium subscribers, as well as the Hidden Gems, Technical Tactic, you name it, they're all in the Research Center for our premium subscribers. But what Nick had said, he's isolated this head and shoulder, and this is one of the best head and shoulders you're ever going to see. All right, you just don't get a better one than this. Absolutely tremendous. You can draw your breakdown line, folks, beautifully right to here. When Goldman Sachs broke this, and broke it yesterday, Nick said, short this thing. It's going to 73 to 74. He said that yesterday at 9:35 a.m. in the morning. Where does it go to? 73.74 by this morning's gap down. What happens then? Obviously, it completed its pattern, and a bounce comes in, and then you see it trading up off that low. Fantastic call. You can't get a better head and shoulder pattern, breakdown, and a bounce play, and a call of where it's going. Calculations will do it all, folks. Our proprietary and technical calculations tell you exactly where these charts are going and where to look for a bounce and where it's going to go for a short and so forth. A fantastic call on that for him yesterday. And we just continue. We just rattle these off as well, whether it's in the chat room or the Research Center and so forth. But I just wanted to point out that chart pattern because I felt it was so fantastic. Now, just going back to the SPY, I want to flip to the intraday. Guys, look what's going on here. I talked about this on the intraday just a little while ago. You had a nice break up, but you really pulled back into the resistance point here, and now you're trading, coming in a little bit, trading right on that consolidation move. So watch for consolidation for a couple candles or a candle or two, or maybe even 3 or 4. As long as it can stay above the 20, that's a bullish pattern formation and could see another move up. If it breaks the 20 here, then you can also start to look for, this is S1. This would be technically S1 on the downside, and then S2 down here at the lows. All right, folks, I hope you found this very informative, a very good learning experience, and I do encourage you to come join the Research Center at inthemoneystocks.com. It's amazing premium services. You'll get all your levels, all your key numbers, pivot days, level supports, resistances on the overall market, oil, gold, U.S. dollar, and any stocks that we deem like Goldman Sachs to be appropriate. Take care, folks. Have a wonderful day.